Welcome back to Upside Down Data. We need to talk about Bitcoin. So following election day, Bitcoin put in quite the move. It went ahead and rallied as much as 47%, putting in an all-time high just under 100K. Now, after that, we have had a drawdown. We've drawn down. Currently, we're about 7, almost 8% down from those levels. And this has gotten some people worried. They think, is this the top of the cycle? Or at the very least, maybe this is a longer term top that will take us a long time to break above. Is this something we should be concerned about? Or is this just normal behavior in the parabolic phases of a bull market? So what I want to do is first talk about some historical examples, and then we'll go ahead and talk about our models and what I'm going to be looking for to tell me when the top is genuinely in. So let's go ahead and look at some past cycles before we talk about what's been going on more recently. So I want to start off by talking about the 2020 into 2021 bull run. We'll also talk about the 2017 bull run to give us some historical examples. So one of the things you'll notice when you look at these prior bull markets is that rather large drawdowns are common. You'll see that in the 2020 to 2021 bull run, we had multiple. We had 1, 2, 3, 4, 5 drawdowns before the ultimate top of that run that were 10% or greater in magnitude, one of them even being over 30% drawdown, so quite large. And also, it's important to note that these lasted for a while. This drawdown was just under a month, really, before we ended up being able to break back above it and get up to the upside. So we can spend a long time correcting, consolidating in service of continued highs later on. And it's also something that you'll really see when you go back and look at the 2017 bull market. Just look at the size of some of these corrections: 33%, 39%, 40%, 30%, 23%. Very volatile. But when you zoom out and you look at this, you just generally will kind of gloss over that and just see one big parabolic move to the upside. And so there's distinct possibility that in this bull market, coming out of a pretty nasty drawdown already that lasted for a long time, it was 33% from top to bottom. We then broke above that. It does seem very plausible that this drawdown we're seeing right now, even if it has to go deeper, we might ultimately just zoom out and see it in service of some broader parabolic move to the upside. Now, never say never in crypto, right? There's always the possibility that this is the top. But it's not my base case. This doesn't look like a top yet to me. And one of the reasons I say that is that when you look at some of our other models, we're not quite at that type of behavior just yet either. So the first model I want to talk about is our upside downside potential indicator, or UDPI. It's a risk model that we have here at the channel. High values mean high risk, low values mean low risk. And it cares what moves that play out over months to multiple months, so longer term in its time horizon. And it's really somewhat of a cheat code to the Bitcoin market. When you see this get all the way to the top of the scale, up here 4 to 5 in that general range, that is when you're either at or very near to the top of that cycle. And then vice versa, when you're down close to the bottom, that's a very low risk point, meaning that you're in the bottom of the bear market, and likely you're going to be entering into a new bull market soon. And that has played out cycle to cycle. One of the reasons why I was so bullish back through here going into 2023 was we got to these really low risk levels, suggesting this is a deep value zone for Bitcoin. And indeed, loading up at those levels has played out extremely well. So where we are right now in terms of our long-term risk is we're just under 2. You'll notice that this intermediate top that we got back here in March, up through this range, we got up to about 2.35 before we ended up cooling off as we had that deeper correction. Risk cooled off, and now we're moving back up again. And so one of the things I've been talking about over on X is that Bitcoin is at somewhat of a decision point right here. It could either do something like it did back here, where it sets some kind of top here and then maybe consolidates, corrects a little bit deeper. You can look at historical examples, maybe something like, for example, going back here to 2020 or 2021, one of these deeper corrections, or maybe even something like this, is a distinct possibility off of these risk levels. And actually, one of the benefits of that happening is that it would let risk cool off quite a bit, give us more upside potential to work with in the next time that Bitcoin wants to run. The alternative is that Bitcoin could just do like it's done in other parabolic phases of the bull market and just go basically straight up. Just keep moving to the upside till we get to the cycle top. But it is an important moment. So that's where Bitcoin finding some resistance here, having some consolidation, isn't terribly surprising, Because in the past, it's done that before. If you look in 2017, actually, there were multiple times where we got up to these, this same general range above 1, below 2, where we ended up kind of bumping our head, having a correction, getting back up there, bumping our head, having a correction, and then ultimately we went up. Something like that would not be bearish in my view, and might ultimately allow us to go further. That would, by not just shooting all the way up to the top, we may actually be able to extend the rally further on. You don't want to go too high too quickly. That actually will limit the ceiling, how high Bitcoin can ultimately go. So this is something we're gonna have to watch, but what this isn't showing is risk being up at 4 to 5. This is not showing us being at a point right now where you'd really expect that top to really show up of the bull market. So that's where I think that if we were to get a correction here, rather than it being the top and us going into a bear market, it'd be far more likely that it would be one of these intermediate tops within the parabolic phases of a bull market that ultimately would build into the all-time high for that cycle, and then that's when you go into the bear market. So not financial advice, you should make of these data as you will, but that's what I'm seeing when I look at this. This does not look like cycle top behavior to me at this point. So another model we can look at that also tells a converging story is our market cycle model. So this model is very simple to interpret. If price is above this blue line, then that is bullish, means you're in a bull market. If it's below that line, it's bearish, it means you're in a bear market. And you see this model does a fantastic job of identifying these macro trend reversals very early and very quickly. This is another reason why I was so bullish back here in early 2023, late 2022 and in early 2023. We flipped this model to be bullish, and it's been off to the races ever since. And you'll notice that we're still bullish here. The model has its critical level, this blue line, down at just over 52K. We're nowhere near flipping that to the downside. And it's really only once you see this model start going parabolic, really shooting up, that you might want to get more concerned that a top is either in or near. We're not seeing that yet by any means. So that's another thing that I'm looking at, that until this would have flipped bearish, I'm going to still kind of lean more on that bullish side. So again, we're not seeing from a risk perspective this looking like a top. We're also not seeing this look anything like a top based on the market cycle model. And the final model we can look at that's useful here is the forecast model. So this is a model that's giving you the probability of upside over the next 6 months, basically. That's what it's trying to give you an estimate of, is how likely is it that prices will be above where they are now in 6 months. And you'll notice that in these early phases of the bull market, the forecast model will always just be very bullish. And that's just because in general, you're looking 6 months out, you're in a bull market, generally speaking, you're going to be up. So the model is very confident in those situations that prices will continue up. But then as you get towards the end of that parabolic phase and you start to get closer to whenever that top is going to be, you see some uncertainty start showing up in the model. It kind of gets more volatile, starts trending down. And then once the top's in, that's when you'll see it really move down aggressively, getting down to these really low levels, suggesting that the bear market is likely upon us. Because indeed, if you're up at the top, then it's a very low chance that you're going to be going up in 6 months. You're in a bear market now. You're going to be seeing prices go down. And so that's happened cycle after cycle. And it seems to be happening again. Now with this one, it's a little bit different, where in previous cycles, we didn't have this kind of long consolidation around prior all-time highs like we did this time around. So it's a little bit different. You see the model got a little bit more uncertain, but still lean bullish this entire time. But now as we're moving up to all-time highs, you see it's starting to move down again. And that might be something similar to what we saw here, kind of bouncing down to levels like what we saw here, like over here. More room in the bull market, but the beginning of the end is definitely upon us. Now we only have so much longer to run before we might start seeing this behavior. And once we see this, the forecast model getting all the way down below 0.2, maybe even down into the single, 0.03, 0.05, those kind of digits. If we start seeing that show up, then I will be very, very concerned. And I would say the bear market is likely upon us. But we're not there yet. And so really what this is suggesting is that the model is looking a lot like it has in prior cycles before the top is in. So you're in the explosive phase of the bull market, the top is not quite in, and then if you see the model really collapse, that would then suggest that the top likely is in, bear market is coming. So when you look across these three models that in their own ways act as cheat codes to the Bitcoin market, they are showing signs of late stage bull market, which definitely seems to be where we are, but not that the top is in yet. So that's why I still remain optimistic that Bitcoin will be able to chart a course back to the upside and will ultimately set in a higher price as its all-time high than what it already has. We'll have to watch and evaluate. Obviously, things can change, and if I were to see these models start to look more dangerous, then I will update my outlook. But right now, I don't think we're there yet. My base case remains that this could just be a normal drawdown within a bull market rather than something that's ultimately very concerning and suggestive of a major top. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And go over to our website, and if you join our Polarity Digital Pro subscription service, you can see live data from all of our models for Bitcoin and a whole host of other altcoins over there. Link in the description.